Good afternoon and welcome, everyone. Thank you for taking the time to join us today. I'm Shiona Vandal, and I'm the Executive Head of Sales for Cybrin. I'm based in Johannesburg in South Africa. And this webinar is a collaboration between Next Generation Systems, which is our authorized reseller partner in Uganda, OpenTech, who's our technology partner for our loan management and origination system, and ourselves, Cybrin. And first, I guess a little bit about who Cybrin is. Next slide, please, Raf. Thank you. So Cybrin was founded 33 years ago, at the time with its head office in Zimbabwe. Today, our head office is based in Johannesburg in South Africa, and we have over 300 employees operating in 15 countries across the globe, with over 100 customers worldwide. Next, please. As an African organization, we are invested in the sustainability of our continent and are passionate about financial inclusion. And I guess for us, financial inclusion doesn't just mean having a bank account. It means providing the people of our continent with access to meaningful solutions that empower and uplift their daily lives. A big part of that from a Cybrin perspective is giving back to the countries in which we operate. We believe that each country has its own requirements and nuances, and we've actually taken to saying that vanilla is not a flavor. Because as each country has its own nuances, we've have a point of presence or a fully fledged office, whether it's support or a fully fledged office in every region in which we operate. By doing so and by hiring locally, we ensure that our customers have people that understand the nuances of their region, and we create jobs for individuals in those countries, thereby ensuring sustainability and growth. And after 33 years of being in business, it's a bit of a brag slide for us, but to have a customer satisfaction rating of 87.3%, I think attests to our commitment to partnering with our customers. Next, please. At a high level, Cybrin has 5 key solution offerings. I'm going to just take you through that very briefly today before we get into the heart of what this webinar is about. So underpinning many of our solutions is our low-code platform, which is really the key to any hyper-automation that our customers want to achieve. Cybrin started our legacy in the payments and clearing space. Solutions in this portfolio include our Payments Hub, which is a centralized payments ecosystem that allows you to manage multiple payment types, such as check, EFT, etc., in a single environment. We also run 3 of the clearing houses on the continent through our Switch Manager. There are a number of different solutions within our payments and clearing environment, but we'll be running a series of webinars on those over the next couple of months so we can focus on those in those sessions. Digital onboarding allows for seamless onboarding, whilst also ensuring compliance to regulatory standards. This includes your full eKYC offering with the flexibility of what we call a journey time builder that allows you to modify an end customer journey depending on what type of product you want to offer them. And this can work hand in hand or separately from identity verification, depending where you are in your digital journey. We have modular solutions like digital signatures that can also form part of an end-to-end journey. If you look at any digital journey and digital environment these days, it typically ends either in a contract or some form of signing or verification components. So digital signatures is fast and rapidly becoming a staple in anybody's digital transformation journey. And then last but not least is our fraud risk management solution covers transaction monitoring to prevent fraud, protect your customers, and ensure compliance. So that's just a little bit of a snapshot of the solutions that Cybrin offers. Next, please. All of our solutions are underpinned and complemented by our professional services team. And this team that can assist from a design phase straight through to implementation and then from an ongoing support perspective. With that, though, I'm going to hand over to Raphael of PO, who is the CEO of OpenTech, and he's best suited to focus on today's topic, which is digitizing your loan origination and management solutions. So over to you, Raphael.
Thank you, Shiona. Just the next slide. Okay. So So I think that the topic for today, we're supposed to discuss unlocking financial inclusion and efficiency. So my name is Rafael Opio from Kenya. I run a company called OpenTech Global Services. We focus on one key product that is a loan management system and also a loan origination system. So our partnership with Cybrine ideally is to also leverage on their strengths as they also leverage on ours in terms of the various industries that they support. So just to give the audience what I'll be speaking to, I'll just be able to introduce the topic for today, also speak into the challenges that we are actually seeing in the industry, the feedback in terms of what the customers have always been expecting us to offer them, some of the best practices that we've seen partners deploy, and also we also advised partners to also deploy. Then how does OpenTech come in with their solution? So that is what is our value proposition. We are also going to have a section where we're just going to talk about an open session where we can have some Q&A in case you have some areas you need some clarification on. So in terms of introduction, I think I need to give this as a introduction just to talk about what financial inclusion is and what space do we play in. So what we've seen currently, ideally, is that what motivates us to do what we do is currently there's a very huge gap in terms of the urban and rural financial gap. And we see a lot of financial services are actually offered in the urban areas. I'm sure this is true for Uganda as well. But very few, when you go to the remote areas, go back to the villages, you find that there are very, very few financial institutions, and you find people there rely on very informal, financial institutions. So they can either be doing groups, they can be doing social groups, or they can leveraging on Shylocks or microfinance. That's what we've actually seen. So that's what we as OpenTech saw as a gap that we offer financial institutions, that we can actually offer solutions to actually target this particular market segment and offer them financial services efficiently. So the opportunity that currently exists is that there's mobile penetration, which is ideally really digitized across the industry. So we are very aware that in East Africa, our mobile penetration is very deep. We are in the world. People talk a lot about the mobile money that we have in Kenya, Tanzania, Uganda. So that is something that is an opportunity that actually exists. Then you also know that when we talk about financial excluded people or segments, there's a high reliance on microfinance institutions, which ideally play a very huge role in enhancing financial inclusion in the remote areas. So as a company, as OpenTech, some of the challenges that we seek to address or with our solution is we do know that there's a high cost for financial institutions to operate branches and the need for digitization. So you'll find that the return of investment on having a branch in a remote area may not be the same as having one in the urban areas. So we are trying to say through digitization, you can actually operate efficiently in the remote areas. Then also the customer segment that you're actually targeting at any given time when talking about this financially excluded segment of people normally do very low value transactions. So if they're coming for a facility or a loan, the facility will not be worth, because there's what's called the customer acquisition cost. So before you actually acquire the customer, and do some credit profiling and credit risk rating on the customer, the value of that customer to the business or to the institution may not be commensurate. So first of all, we know that the customer base is disbursed in the remote areas, and then the transactions that make sense to them or what the financial institutions can actually extend to them are of low value. And then the last challenge that we know exists currently is there's lack of data to inform credit decisions. These are people who do not exist in any financial system. You may not be able to look at transactions, their day-to-day transactions, and inform you about their affordability. Because ideally, when we're talking about a credit decision, you're talking about affordability. How much can this client ideally afford when you're giving them a credit. Then currently we've seen a very aggressive approach from the fintechs. I'm sure fintechs are operating in the various areas where you are currently. So there's a very aggressive competition from the fintechs who have come in with very innovative ideas. They have apps on the App Store. They're using machine learning. They're lending to all these customers. Yet our financial institutions that we currently have still operate the traditional, kind of lending. So that kind of competition, this means that the fintechs are actually eating a chunk of our customer base. Then you're also aware about the low financial literacy levels and distrust. So you'll find that offering financial services to the excluded, you need to also be aware that it's not only a technology play, because most of the people who are in the rural areas and remote areas, there's also a level of low financial literacy as well. And there's also the socialization or distrust that they need to see the organization to trust it. They need an organization where they can trust that they can put their money there or they can actually borrow from there. So in terms of what we've had, the major customer expectations that we've seen is customers want institutions that can offer them accountability. If they save with you, they want to be able to quickly check simple things like their loan balances, their savings balances, and in an accountable way, but that it's not there's some sort of accuracy around the information. The thing is, because of the competition of the fintechs and all that, these customers expect that we offer shorter TATs around the requests that they make to us. So that will be, talking about loans, savings, balance, and loan limits. Because they want to sort an immediate need. They're not willing to wait for 2 weeks, 3 weeks just to be given a loan. So they want, that shorter turnaround on those requests. That's something that a lot of customers are actually looking up to for institutions to offer. So institutions that can offer that kind of value to them, they quickly run to those kind of institutions. Then that thing is process efficiency. So you'll find that most of the customers actually love working with the institutions that have seamless processes. So for example, they're making a loan payment. We do know we can leverage on the digital or payments platform that exists within the region. So we have our mobile money network. We have very good banking systems. So customers just want a bank that is integrated to these particular payment channels. Then we can offer them some sort of convenience, which is my fourth point here. They can do real-time access to loans. They can do deposits. They can do withdrawals, because customers do not want to walk kilometers and kilometers just to do a withdrawal. They'd like to do all this at the convenience of either their business premise or at home. Okay. So when we talk about some of the best practices that we've seen, many of the institutions that are offering or making creating value in this particular value chain is they have adopted a lot of mobile and digital banking solutions. So you'll find the institutions have ideally a digital strategy. So that strategy is guiding how they're actually even doing their product development. And because the reality is, in terms of mobile phone penetration, there's a very high mobile phone penetration currently in the region. Internet is also improving, and so in terms of our strategy, if you're looking at a digitization strategy, then if you're not ideally digitizing or having mobile and digital banking solutions, you're actually losing out currently. There's what you call collaboration. I've seen a lot of institutions now, instead of having the expensive branches, there's the agency networks that are deploying. So they're actually partnering with agents on the ground who can offer the same banking services. So you'll find institution has agents that they have actually, can at least offer the major banking services that a customer would look for. So they can do some deposit, they can have some inquiries, they can look at the balances, they can do some withdrawals in the remote areas. So such that now these customers don't feel like they're excluded from the banking system. So we've seen a lot of partnerships where I sit in Kenya, we see partnerships with institutions that have agents like there's a bank here called Postbank that partners with a lot of MFIs here to use the agent network. The other thing that we've seen as a best practice currently, because of the lack of data, we are now building what we call alternative credit scoring models. So we're trying to see, apart from just using transaction data, what other data can inform credit scoring. Yeah, so transaction data is important. I know we currently utilize statements, bank statements, or mobile money statements to sort of see if a customer is able to afford. But there are some other data points that also can also inform in terms of customer enhancing the customer credit scoring, because credit is not only about the ability to pay. There's also the capacity of the customer to pay, the character, all that. So we are trying to create a credit scoring model or a credit score for this customer based on other parameters that are not only transactional. Then we've seen a lot of institutions tailor-make products that are that actually talk to the local needs of the financially excluded. So you'll find that there are those traditional products that we offer. So if I can give an example, we've seen a product that has been offered to around the lake region to people who are specifically dealing with like fish farming or farming of fish. These are ladies who actually farm from they actually buy fish from the fishermen, and they're supposed to ideally supply it to different to a supplier who supplies to different hotels. So sometimes these ladies are not able to gather enough capital just to buy the fish, just then to give it to the supplier. So the supplier has partnered with a financial institution that offers this credit to this particular group, that value chain. So what we've seen a lot happening currently is institutions, getting into specific value chains. So that's just an example. Then they tailor product that actually meets the needs of this particular niche of people. So what this does is that you're not just giving out a loan without intent or knowing what is the actual need of this loan. So the mistake that many financial institutions have made before, and we've seen, is ideally pushing around the target of just dispersing loans to grow their loan books. But what happens after that is that you will find yourself, you've not funded the need of the customer. So at the end of the day, the customer actually defaults. So you'll have done a very good job to ideally figure out the affordability. Can the customer pay? But did you actually fund the need of the customer? So that's one thing that we've seen many institutions currently doing as a best practice, just to figure out, are there specific value chains that we can actually finance, tailor-make products. Then the other thing that we've seen as best practice currently, that is a very big conversation, is about the regulation. Some of the MFIs, this is off tech now, some of the MFIs are actually lobbying around regulation to be regulated in their own sector. And then there's also a need to foster a balance between technology and human interaction. So as I was speaking through our product, this is one of the very key things that we've seen, that because of the low financial literacy levels of this particular segment, there has to be a balance between technology and human interaction. Because as you talk about digitization, many people think digitization and then you take away the human element. So when you talk when you think about this particular market segment, the human interaction is what now elevates the trust levels to ideally interact with the financial institution. So then technology only comes in to enhance, that kind of relationship, such that if, for example, a loan officer or a sales officer was handling 20 customers, then the technology should be able to help that particular sales officer or loan officer to handle 100, so or even more, what we call a caseload. That is the value of technology. So we are not taking away the human interaction, because it's important for this market segment, but technology is just coming as an accelerator to ideally allow this particular salesperson to be more efficient and more productive in that particular process. Okay, so what value does OpenTech offer? What are we doing with Cybrain? So what OpenTech offers is a platform, a cloud platform called Rahisi. So Rahisi is a Kiswahili word that means easy. So we're trying for our mantra is the system should be easy for anyone to use. Like if anyone logs in, it's supposed to be something that they can quickly figure out without even being trained. That's why we came up with the word Rahisi, just to mean easy, cloud banking service. So we do offer it as a software as a service platform or platform as a service as well. But this does not limit us to doing on-premise installations. Our preferred model, of course, is software as a service because it allows us to support better, do updates quicker, and it's also in terms of pricing for the particular solution, it becomes cheaper on the organization because of the hosted kind of technology. So what we do empower institutions to do is to offer, first of all, to offer microloans. Yeah, so we are enabling them to ideally also, to be competitive against the fintechs. So we do offer microloans, so the system can support microloans. These are just consumer loans that customers would like to have. We have SME financing, so those are we're looking at loans that are targeted towards the small and medium enterprises. These are businesses that are a bit more established. We'd like to fund them more, but you'd like to originate the loan in an organized way, collect the documents from the field, run it through a workflow, do some affordability analysis, and then give out the loan. Then also we do offer digital banking within the platform. So our value proposition for the particular platform, we have three key value propositions that we usually talk about when you're talking about our platform. So first of all is we're trying to digitize customer outreach channels. So what is being done at the branch on the branches or head office, we're trying to give this particular access to the users. So that's how we support things like agency banking that allows you to now expand into remote areas. So if you think about loan origination, then the channels that we do offer are now via web. So it means you can originate a loan via the web that is at the branch level of the office. You can use USSD channels if customers need to self-register for loans that don't require a lot of information. We do provide mobile applications. We do provide, SMS banking. So we do have a customer management module there. So if you need to do, communication to your customers via SMS, we also have voice integrated into the system. If you have a call center, you can have that integrated into our system as well. The other value that we do give is we have a customer scoring through alternative, data. So each and every organization, as we've come to realize, has a different risk appetite. So what I do in organization one, in terms of customer scoring, may not work for the second organization. So our approach to customer scoring is a bit customized. We actually do customized credit scoring. We sit down with the credit risk in what we call customer or credit models, both for when you're originating the loan and also for when you're maintaining the customer or what you're saying repeat loans. So we could have a scoring model that does the customer onboarding, so that shows you the bare minimum of what this customer would be, and then we have an internal model that actually talks to you about how the customer is interacting with the organization. So that means that you do not have to score the customer several times as if they're a new customer. So you're actually looking at a customer on for example, how are they repaying their loans? How are they doing their savings? What other products do they care about that you can actually offer personalized products? So that's how our credit scoring works. We still also, within the credit scoring model, we've not taken away the ability to do it on bank statements, mobile money data. We still do integration to the various CRBs. but we can also come in and do an enhanced model once the customer is within the organization to allow you to ideally now grow with the customer and offer more personalized services with the customer. The other thing that we do offer around that is, this documents management. Of course, this is for during the loan origination process. We're able to offer you a loan management or documents management module where we take away the paper. So we automate things like loan agreements. We are able to collect supporting documents from the field and all that. The third value is, which is very important, is we're trying to enhance the customer relationship by leveraging on technology. So this is ideally for people or institutions that still have a sales staff on the ground, where we do offer a field application for the staff to use as they interact with the customer. So that's what we call a field services app. So this means that you can go to the ground, capture customer data, customer onboarding, it's not just the onboarding bit, but if there's an existing customer and you'd like to serve them, we are giving the capability to have an application that can ideally, you can serve the customer at their doorstep. So that's a field services app that gives the customer a feeling of being at the branch, but they are actually at their place the place of business or place of work. So within that particular app, we also recognize that the institution is also interested in the performance of their staff. So within the app, we've enabled capability to do things like performance management. So just for example, if you're having sales targets, if you're having, if you want them to bring certain number of customers, you measure quality, how the loans being collected based on how the officer originated the loan. So all that is within the app, and it motivates. What we've seen this does, it motivates the field officers or the sales officers to ideally push the target. So they don't have to wait at the end of the month for their targets to be pushed to them, so that they know how they performed. It's more of a proactive way of managing performance management when it comes to around the field staff. Okay, so with that also within the system, we do regulatory reporting. So we are able to generate regulatory reports to the regulator. Some of the regulators require that we do straight-through processing. So we've done straight-through processing via APIs to the regulator for some regulatory reports as well. So that is a possibility that we've also worked on. Okay. So the next slide, I think I'll not talk too much about it, but it's around just a summary of the features that I've talked about. So we still enhance in terms of security, because the security concern, it's on the cloud. How do you do your system security? We do have quarterly pen tests and security tests around the system. So we are offering a loan origination system, credit scoring, digital customer onboarding. We have an app for that. Customer can do self-registration. We have a reporting module. In terms of communication, of course, and that's where we get the SMS and email. We do have a fully fledged accounting module that enables you to configure things like chart of accounts and various GLs within the various GL accounts doing your accounting. So that at the end of the day, you can come up with some financial reports. You can talk about your income reports. You can look at your cash flow. You can look at your balance sheet from in terms of your asset base, in terms of if it's just you just using it for the lending for the lending platform. We have the field services app, what we're calling the loan officer tracking app, that allows them to serve the customer at their point of need, and also be able to track their performance as well. So the next slide is just a high-level architecture, just to show what the system is all about. We do have the different touch points. So we can have a back office web application. We can have interaction with the system via the branch or field services app. We can have interaction. Customers can use an app or USSD. All these are connected to some backend via APIs. So any technical guys within the room. So our system is wholly wrapped with APIs. So what this means is that we can extend our services with existing systems that you have within the institution. So in case you already have a mobile app and you want to plug it into the loan origination system, what we do, we'll offer you an API, and then you can be able to plug that into your existing applications. If we need to, maybe have a loan origination system, you already have an existing core system, but you want to enhance the ability, maybe your core system does not have some functionality around loan origination, be able to connect to your core system via APIs and push that data to your core system once maybe you want to do a loan disbursement or we get the loan repayments as well. Okay, so the entire system is linked to a credit scoring engine. So the credit scoring engine is not within the system. That's why I say it's customized to fit specific institutions and also specific markets. Because you can go to different markets and you find different sets of data, where we should be able to customize that for it to work for the situation that we are in at any given time. Okay, so I'm just coming to the end of this. So the next screens are just samples of some of, if you wanted to see USSD, this is how our USSD menus would look like. You can have a menu for loans, something simple. You can look at, you can have a visibility of the app. So this particular app has more functionality just than the loans. You can do, it actually has everything that a mobile banking system has. You can pay bills, pay merchants, do a deposit, can send money to bank. So just to show capability of what you can do from an app perspective, linked to the back end of the system. Here, the customer can also see, their account statement. They have the ability to download their statement, look at their various trends. You have the ability to actually see different loan products. So if you're offering a loan product, you can also, give the customer more information about the product. Do they qualify for it? How much do they qualify for? And all that. So I think I'm going to stop there. Viewed around 40 minutes, just to allow for any Q&A. I think, Shiona, you can run the Q&A.
Thanks very much, Raf. I see we don't have anything in the chat at the moment. I'd just like to, we've opened the floor, so please, anybody who has got a question, please feel free to post that in the chat. But Raf, while we're waiting for that, I would just like to understand, I mean, what I love about this is an African solution that's used to our markets with low latency environments, used to lack of, formal credit scoring. You spoke quite a bit about, alternative credit scoring, as well as sort of the rural environments. How does the application work, with low latency environments? I think that's something I'd just like to understand.
Okay, thanks, Sean. I think what we've done, we are alive to the reality that most of our areas, in fact, remote areas, there's no good network connectivity. So what we've done is that we've made sure that the application itself can work. We have an offline mode, so it can work offline. And then once you get into an area of network connectivity, then we'll be able to sync that data back into the system. So yeah, so that's something that we actually had to work, had to have that work for data consistency as well.
Okay, excellent. Thank you. I'm sorry, I seem to be having a bit of an issue with my internet connection at the moment. And then, Raphael, one of the other questions that I wanted to ask you, I think, from a compliance, as we're seeing regulation and compliance becoming more prolific throughout our continent, in fact, in a lot of the developing markets, compliance and reporting is quite a key thing from the regulators, and to ensure that, we're getting off sort of these grey lists and to ensure better credit ratings for the countries in which we operate. How does Rahisi deal with that environment from a compliancy and regulatory perspective?
Yes.
On the reporting side.
So there are two ways of looking at it, Shiona. So we already support different integrations in the countries where we operate in for into the different regulatory bodies. Okay, so for in reports, we do provide those reports. But also, this is where our partnership with Cyberlink also comes in, because I know we are also building on the AML solution that Cyberlink actually offers, which I think you can also speak into as well. Yeah.
Okay, great. Thanks. That's actually quite a good point.
Transaction monitoring, yeah.
Well, I think there's twofold, right? One is from the EKYC perspective when you're onboarding somebody, particularly in the digital environment that we're living, or that they wanted to potentially onboard themselves through, the mobile application or the web application from a client, is we could obviously do the full EKYC perspective there, which is where we're linked into a national data registry. We can do the validation checks on the ID against their version of Home Affairs. We can do the screening on the person. We could obviously from a formal credit bureau perspective, we've got links into a number of those across the continent. So that's the one part. And then obviously on the transaction monitoring piece, we've got that component with real-time reporting and regulatory requirements. I think to your point though, Raphael, is whichever country we operate in, there are those nuances around those regulatory and compliance requirements. Some of those we know, and we know well. I mean, you've been operating in East Africa for a number of years. And others, as we get to grips with those, the wonderful thing about the types of organizations that we are is that we can obviously develop that quite quickly and build that into the product, where a large number of the larger players, global players, are not that invested or interested in building that out for our specific continent. Correct?
Correct, Fiona, yeah, correct.
Okay, great. I see that Ian is busy typing a question, so we're just going to give him a moment or two to do that. Raphael, I think from an East Africa perspective as well, we've spoken a lot about what Rahisi can do and how it can automate that. You have a number of customers in East Africa. How were they doing it before? And what sort of results have they seen by implementing the likes of a Rahisi, aside from obviously there's the efficiency component?
Sorry, just come again, just 1 minute. Or how they were doing it before?
Yes.
Before this now, before what we're doing
Before
now.
automating it, yes.
Okay,
I'm assuming that's either that's been done in a general ledger or it's been done manually, so Rahisi is really solving for a pain point there. And that's what I'm trying to understand, how they're doing it if they're not using Rahisi.
Yeah. So before we started digitization, the way lending used to work in this sector ideally would be you have field officers going out to the field, and they would literally collect cash from the customers and then go with the passbook, deposit the cash in a bank account, then come back with the receipt to the head office, and then that is posted in the core banking system there. The core banking system there was either I don't know if people in this room have seen desktop applications. So it was sitting in a desktop somewhere. So if the machine crashed, that was it. Some of them had servers within the institution there. So it's sort of they call it a server, but just a machine that sits there. If it crashes, that was it. The biggest risk was cash handling. That was initially there. So that was the first risk that we actually took away by integrating this institution to the payment, to the formal payment systems, whether be it mobile money, bank, so that a customer could walk to any bank, make a deposit, and that transaction could be sent to the MFI or what we call SACCOs here. Then that will reflect in the customer's account. So the customer had more trust that if they actually walked into an agent that is existing there, that they know the money is deposited there, there's real-time deposit into the account, and they get an alert. That particular alert may seem something insignificant, but that is where the trust is built. The customer feels, oh, my money has actually reached the bank account, as opposed to before, where sometimes there was also the element of fraud around some stuff. So they could be given cash and the money never reaches the customer's account. That was one thing. We also found institutions where they were running some products on Excel. It was a reality. So we also did automate some of those kind of institutions that were actually, running on Excel as well. Okay.
Great. Thanks so much, Raphael. I see that Ian has posted his question. Ian, I'm happy to read the question to Raphael, but I have also allowed your microphone. If you'd like to ask the question yourself, you're welcome to unmute yourself. Alternatively, I'm happy to do that on your behalf. Okay, so Ian's saying I can do it on his behalf. So he's thanking both of us. He's saying that we shared a lot of information. And Raphael is saying you mentioned funding the need of the client, and it's good to disperse loans, but ideally the goal is to fund the need of the client. How do you go about growing financial literacy among the clients for the sake of empowering the clients and providing financial information that would enable the clients to grow?
Okay, so that two ways I've seen organizations do this. So there's a tech play around it. So you can obviously what we've done before is we've enabled because the person who actually does the financial education to the client is the person who meets the client. So the first thing is within the platform we can enable what you call educational videos or content within the platform that the loan officers are using to train the client on the different products or options that they do have. Okay. The other thing that I've seen some organizations do is just use SMS banking. So often than not, they will educate the client around what they have, or send a link via SMS. The client can watch that educational video. That has gone a long way. So where there's low literacy, there's low educational literacy, then there's that human touch that has to be done. And that is actually has to be an initiative of the organization, and technology can only help now to hasten that particular process, either by using small things like SMS, or having videos within the platform that the officers are using, that they could use, education material that they could use to train the clients around financial literacy, so that once they're approaching a client, they're able to educate the client and also even recommend proper products that actually help the client. Because sometimes clients may have a need, but you find that they are not aware of which product they need to use, and then they pick the wrong product, and sometimes they find themselves in a debt that they did not ideally, in a hole that they didn't actually think they could be in. So that's what I've seen most organizations do here as well.
Thanks,
So,
Raphael.
thanks, yeah.
Ian, I hope that answers your question. If there is a follow-up, please feel free to also put that in the chat. But effectively, Raphael, what you're saying, and I think what to Ian's question is around the empowerment and upliftment, is we're actually trying to provide better loans based on better data to the individuals, as opposed to just offering higher value or higher interest-bearing loans, but without the background data. So we're helping both the customer and the customer's end client. Correct? Raf?
Oh, correct. Sorry, I was unmuted. Yeah, that's
No.
correct. Yes.
Okay, so at the end of the day, I mean, going back to the point around, financial inclusion and empowering that, I think that's a really important distinction to make there. I see that we've got somebody still busy typing, so let's just give that a moment. Okay, there we go. Sorry, Rita. Rita, I hope that it's okay if I read on your behalf, because we've got 8 minutes left. So Rita's asking, there's no doubt that digital financing encourages financial inclusion, but do you have any principles that guide you on responsible financial inclusion?
Yes. So of course, there are general principles, or rather guiding principles that guide on what financial inclusion ideally is supposed to be. So I think the most common one is ideally around transparency. I just talk top of my mind what I think are important principles that should guide around financial inclusion. It should be around transparency. So the reason why you may exclude customer segments, you may think you're including them, but you're actually excluding them, is because there's a lack of transparency around what you're doing. And transparency, talks about also, pricing. So if you actually need to do proper financial inclusion, then the pricing has to make sense to them, right? So, because sometimes what we've seen people doing is they're actually taking advantage of this excluded group of
Yes.
people. So, that kind of fair pricing then avoids, encourages financial inclusion. The other thing that is around credit that I've seen is a huge problem is what institutions are doing. We call it overfunding. So since some of these institutions don't have a mechanism to check if this customer has already been funded before, and the people doing the sales, or people who are trying to convert customers to take credit for them, do not care about if this customer already has other loans. So there is need to have a way. Technically, what we do when creating the credit scoring models, we try to avoid or what you call over-indebtedness or overfunding or over-indebting the customer. So we will show you that this particular customer has 5 loans and they're trying to take the 6th loan. If you give this customer the 6th loan, they'll not be able to pay, okay? Because this is a very it's a very big problem even here in Kenya. The people funding customers, and the only thought in people's mind is we just need to get the institution is just thinking about the profit, but you'll have no profit if you have no customer. The customer will not be able to pay. So of course now that one also comes around your how do you design your products. I'll give an example of some product that has been designed for ladies around the Lake region. So you need to design products towards customers' needs, so that a customer actually is coming for a product that they can afford, and you're not also over-indebted them. I think those are the 3 main things that I would think around currently. And also you need to think about the vulnerable, because I know there are institutions that if you do know that this particular customer is, they're vulnerable, either they're disabled, they are not they're not very, very literate. So we need to have a way to protect those kind of vulnerable people. Yeah.
Thank you. Thanks, Raphael. I'd just like to add that I think there's 2 components to that. One is, so from a Rahisi perspective, you can obviously give early warning with regards to over-indebtedness and the likelihood of somebody defaulting on whether that's one specific loan or multiple loans based on the history and the number of loans that they have. So I think that from a technology perspective is one. Going back to how we started this conversation with partnerships and collaboration, is technology can only take you so far, obviously. So from the client end, or whoever is using the system, there is obviously an onus there as well to act ethically as best as possible. And I think you summarized that really well when you said, we get greedy and we think only about money, but when you can actually see that in a report, which saying is you're thinking it's a short-term win, but actually they will be defaulting on 5 different loans if you give them a 6th loan, and trying to not take advantage of the vulnerable and the weak. So really appreciate that answer. Ian has responded just to say thank you very much, Raphael. Yes, it does answer the question, because banks tend to have an issue of write-offs. And when you go back to the basics of why it happened, you may find many lack this education and literacy. And thus people are left with a debt burden, which hampers growth and financial inclusion and empowerment. So yes, thank you for answering the question. And Ian, I think that's a really good response to that. And going back to the, how do we as vendors, first of all, help our customers be better informed to ensure that there aren't over indebtedness, which fundamentally goes back to the ecosystem of, helping your clients better manage their requirements, their financial requirements, in such a way that everybody is empowered and uplifted through that process. I think we have time for one more question. If anybody wants to, type that into the chat, I'm happy to answer that. I've also just in the interim popped Kiwanuka from Next Generation Systems contact details in the chat. For those of you that don't have it, we will be sharing this recording link as well as the decks that we presented today to everybody that was on the call. But if you'd like to schedule something specific to your environment, please feel free to reach out to Kiwanuka, who would happily schedule for that for us in the interim. I see Rita is typing. I'm not sure if that's a question or a response to her question. So Rita, I'm hoping that we have answered that well and to your satisfaction. And I'm just going to give it a moment. There we go. So responsible financial inclusion is working with clients so they do not borrow more money than that they can repay or use products that they do not need. Thank you, Raphael. Rita, could not agree with you more. And I think that is, as part of that ecosystem, all of us as individuals, as a community, and as society, that onus is upon all of us to ensure that we uplift the vulnerable and the people that need it the most, and to not take advantage of that. I think on that note, that's all we have time for. I'd like to say, and I hope I'm saying this correctly, Wibali Nyo. Thank you all very much for joining us. To you, Raphael, Asante Sana, thank you so much for sitting in on this session today, and look forward to seeing some of you on our next webinars, which we will be sending out shortly. We'll be having a series of those throughout the year. Thank you so much, everybody. Good afternoon. Bye-bye.
Bye.